A $12,000 job can look like a 40% winner on paper and still keep only 4% once every real cost lands on it. I'm Corey. Here's the 5-bucket system that finds that number and the 20-minute weekly habit that stops it from happening again. You picked Jobber or Housecall Pro. You're paying for it every month, and you still can't answer the one question that actually matters. Did that last job make money? Both vendors sell a job costing feature that promises to answer exactly that, but on both platforms, it sits one paid tier above where most small crews actually live, and neither one's QuickBooks sync carries that profit number into the books your CPA opens. So let's go through exactly what each vendor's own documentation says their job costing feature tracks, what actually moves into QuickBooks and what doesn't, and the one structural gap both of them leave open, no matter which one you pick. First question, if you're already on Jobber, is job costing even part of your plan? Only if you're on the third of Jobber's 4 plans. Per Jobber's own pricing page, checked at the time this was written, the tiers run Core, Connect, Grow, and Plus, each stepping up in what it unlocks. Job costing itself first appears on Grow, the third tier up. A shop on Core or Connect, the 2 entry plans, has no job costing screen in Jobber at all, no matter how long they've been a customer. And even Grow doesn't get you the full picture. Automated job costing, the version that captures line item costs and logged expenses with less manual entry, is locked to Plus, the top plan. So there are really 3 tiers of Jobber user. No job costing at all, manual job costing on Grow, and automated job costing on Plus only. And the pricing page doesn't make that 3-way split obvious at a glance. Now flip to Housecall Pro. Same question. Which plan actually unlocks job costing? The middle of its 3 plans. Per Housecall Pro's own pricing page, the tiers run Basic, Essentials, and Max. The Essentials tier description states it lets a shop track and report the costs associated with each job. And that same tier is also where QuickBooks Online Sync first shows up. A shop on the entry-level basic plan gets online booking, invoicing, payments, and dispatch, but no job costing and no QuickBooks connection at all. So you're paying for Grow or higher on Jobber. What does that job costing screen actually calculate? 3 inputs, with profit as revenue minus total cost. Per Jobber's own job costing help article, labor cost comes from each employee's hourly labor rate, meant to include wage, benefits, and taxes, multiplied by their timesheet hours on that specific job. Material cost comes from line item unit costs on the job. Expenses are whatever gets logged directly against it. None of that calculates itself. Someone has to enter accurate rates and log every expense for the number to mean anything. And Jobber's own documentation admits real cracks in that number. A labor rate change only applies to future timesheet hours, not any past ones, so old jobs never get recalculated after a raise. If a job has both a line item cost on the quote and a separately logged expense for that same cost, Jobber's own docs say it currently counts both against profitability, a double count that quietly understates margin. And job cost reporting isn't available at all for recurring jobs, so a maintenance plan customer's profitability never shows up in that report. Housecall Pro's Essentials tier promises the same kind of answer. What does its version actually track? 5 categories instead of 3, with a profit margin formula on top. Per Housecall Pro's own job costing setup guide, it tracks labor at a fully loaded rate, meaning base hourly pay plus employer-paid taxes, insurance, and benefits, multiplied by time on the job, including travel time. Then materials, miscellaneous expenses like permits or parking, commissions, and service line item unit costs. Per its own job costing reports article, profit margin is gross profit divided by job revenue, where gross profit subtracts every one of those categories combined. But it has the same retroactive blind spot Jobber does. Housecall Pro's own setup guide states plainly that adding or updating an employee's labor rate after the fact will not retroactively update the labor costs already calculated on past jobs. A shop that raises pay mid-year and never rechecks old job cost reports is looking at margin numbers built on stale, underpriced labor. So, Jobber computes a profit number inside the app. Does that number actually reach your QuickBooks file? No. Per Jobber's own QuickBooks integration FAQ, the sync moves clients, products and services, invoices, payments, and timesheets one way, from Jobber into QuickBooks Online. Job costing isn't on that list. And per Jobber's own item sync article, that timesheet sync only moves total hours per team member, not a labor cost tied to any specific job. Your bookkeeper sees hours. She does not see what those hours cost against a particular invoice. There's a subtler problem underneath that. Jobber's own job costing help article states that after an initial one-time cost import from QuickBooks Online, quote, Jobber becomes the source of truth for costs, unquote. That means whatever Jobber's job costing screen shows from that point forward can drift away from what QuickBooks actually reflects, with nothing in Jobber's own docs describing an ongoing two-way reconciliation between the two numbers. Same question for Housecall Pro. Does its Essentials tier job costing make it into QuickBooks? Also, no. Per Housecall Pro's own help article on syncing to QuickBooks Online, the integration moves invoices, payments, new customer records, and new price book items one way into QuickBooks. Job costing and labor costs don't appear anywhere in that list. The same article notes estimates never transfer to QuickBooks Online at all, and anything deleted or canceled inside Housecall Pro has to be deleted separately by hand on the QuickBooks side. So a shop can build a fully loaded, travel time inclusive labor rate report inside Housecall Pro's Essentials plan, and not $1 of that labor cost, material cost, or resulting profit figure ever reaches the QuickBooks file the CPA actually opens at tax time. So both vendors build their own job costing screen, and neither one connects it to QuickBooks? Is that a coincidence or a pattern? It's a pattern, not a coincidence, and not unique to these two. Both platforms compute per job profit from data entered inside their own field app, timesheets, labor rates, line items, and that number never lands in the one place. A shop's actual books, tax return, and CPA all live. This blog has documented the same structural gap across Service Titan, Builder Trend, and Service Fusion in a companion piece on QuickBooks Sync Gaps. It's an industry-wide pattern in field service software, not a Jobber or Housecall Pro specific problem. QuickBooks itself has a feature built to hold job-level cost. Does that fix it? It's the right feature, but it comes with two catches. Per Intuit's own help documentation, QuickBooks Online Projects requires the Plus or Advanced plan, an extra cost on top of whatever Jobber or Housecall Pro already charges. And neither Jobber's nor Housecall Pro's own integration docs describe automatically feeding time entries or labor cost into a QuickBooks Online project. Even a shop already paying for projects still has to build that bridge by hand, job by job. Put both platforms side by side. Where does each one actually come out ahead? On raw cost categories, Housecall Pro tracks more, 5, including commissions and travel time and the labor rate, against Jobber's 3. On which tier gets you there, Jobber unlocks job costing one plan earlier in its lineup than Housecall Pro does in its own. On QuickBooks Sync Depth, they're functionally tied at 0. Neither moves job costing, and Housecall Pro's Sync additionally skips estimates entirely, something Jobber's Sync does include. Neither platform wins on the question that actually matters to an owner staring at a bank balance. Does the profit number I'm looking at match what my books say? On that specific question, both platforms land in exactly the same place, because both built their job costing math to live and die inside their own field app. One more practical question before the comparison. Can a crew actually use either app in the field without calling the office? For scheduling and payment, Yes, on both. Housecall Pro's own mobile app page confirms offline access to schedules and job details, plus in-field card, check, and financing payments. Jobber's own mobile app page confirms clock in and out, job details, quotes, and auto-generated invoices from the field. What neither vendor's mobile app page documents in detail is in-field material cost or job cost entry, the exact data that feeds the job costing screen this whole video is about. Does any of this mean a shop on Jobber should switch to Housecall Pro, or the other way around? No, and it's worth saying plainly. Both platforms do scheduling, dispatch, and invoicing well, and this blog already has a separate, honest comparison of the wider small shop platform decision. This piece is narrower on purpose, what each one's own job costing feature tracks, and what its QuickBooks sync actually moves. Switching field platforms carries its own real cost and disruption that this comparison doesn't cover and shouldn't be the takeaway here. So, if switching platforms isn't the fix, what actually closes this gap for a shop running either one? A layer that checks the field app's job costing number against the real QuickBooks general ledger, computing burdened labor cost the same way every time, instead of trusting whichever screen happens to be open. That's not a feature toggle inside Jobber or Housecall Pro. It's a reconciliation step that has to sit on top of both systems, comparing what the field app says a job made against what the books actually show for that same period. 4 checks any owner can run today before paying for anything. Check which plan you're actually on against the tier where job costing unlocks. Grow for Jobber, Essentials for Housecall Pro. Pull up the job costing screen next to your real QuickBooks profit and loss for the same month. Confirm your labor rates are current, since neither platform fixes past jobs retroactively. And time how long it takes your office to reconcile the two numbers by hand each month. That's the real cost of this gap, not a missing feature. Where does Top Builder AI actually fit, given that no self-serve product connects to Jobber or Housecall Pro today? Through a done-for-you teardown and install. Not existing software a contractor signs up for and connects alone. It's a human-delivered install that reconciles whichever field platform a shop already runs, Jobber, Housecall Pro, or Service Titan, against its actual QuickBooks books. And every dollar it produces comes from deterministic, tested computation, never a guess or an LLM estimate. No shipped self-serve fixer for either platform. This is a sourced method delivered as a configured install against a shop's real data. No invented numbers. Every pricing, feature, and sync claim in this video traces to that vendor's own current pricing page or help documentation. No specific integration claimed that isn't verified. This video names what each vendor's own docs say syncs and doesn't, nothing more. And a person approves every number. Nothing here auto-edits a shop's books, labor rates, or job records. So here's the fastest way to check this yourself, tonight. Open your job costing screen in Jobber or Housecall Pro, whichever one you run, and open your real QuickBooks profit and loss for the same month, side by side. If those two profit numbers don't agree, or if you honestly don't know because nobody's ever put them next to each other, that gap is exactly what this video walked through. And that's the idea. The back office Service Titan never automated, run by AI that learns your shop, and you approve every move. Read the guide, then book a call.